Hello, everyone. My name is Marlena Herilau, and I'm your hostess for today. Together with me, I have Peter Yosif, our senior
Hello.
market analyst at IronFX. Peter, thank you for joining us today as we're looking at the fundamentals that are driving the markets currently. So, Peter, what's up in the markets today?
Well, the markets, maybe the first move which we made a comment on would be dollar, which is still weakening.
Mhm.
At the same time, we have to note that US stock markets, despite some rebound, are still in an ambiguous position. It was characteristic that we had the earnings of Snap, and Snap actually tumbled in the pre-market hours. At the same time, we had a number of financial releases in the early European session, which more or less tended to drive the markets. And that could be a precursor for what's to follow in the coming hours. Overall, though, we have to say that the markets have started the day rather strongly, and volatility seems to be higher than previous days.
Okay, that's interesting. Does the release of the preliminary PMI figures really matter today, especially for the euro area?
Yeah, actually, for the euro area, it would be quite interesting.
Okay.
We had conflicting messages. On the one side, we had the Eurozone as a whole and France, which had dropping PMI figures implying a slowdown of economic activity. One of the main worries, though, of Euro traders today was Germany's manufacturing sector. And Germany's manufacturing sector took the markets by surprise as it rose and actually implied an acceleration of economic activity. And that was a positive, practically holding Euro bulls on the front line. I would dare to mention also that today's release of Germany's manufacturing sector PMI may have been also a continuation of yesterday's IFO indicators, which also improved, also taking the markets by surprise. It was characteristic that both the market sentiment indicator was higher, implying a less pessimistic outlook for the largest economy in the Eurozone. At the same time, the current conditions indicator improved as well, implying that the situation on the ground actually is getting better. And if we take that and combine it also with ECB President Lagarde's statements, which were made yesterday and today, where the ECB president practically mentioned that the bank is possibly going to be moving into the positive territories for interest rates until the end of quarter three. That would be until the end of September. And at the same time, we would see an ending of its QE program, and that should be early in quarter three. So practically, the bank is about to drain the liquidity out of the euro area. At the same time, it's going to be hiking rates and seems to be serious about it. It's not just a word of saying. It would be also interesting to note that policymakers, ECB policymakers today had mentioned the possibility of consecutive 25 basis points rate hikes, something which more or less tended to refute any ideas for a 50 basis point rate hike in the coming months. But there is, I would dare to say, a desire to start hiking rates at a gradual and steady pace in order to start tightening the bank's monetary policy back into a somewhat normality after years of negative interest rates.
Nice. And what about the pound?
The pound had an interesting reaction. It's a very interesting question. We had a surprise reading from the services PMI indicator it was the preliminary PMI indicator for May. Actually, the indicator dropped and dropped more than expected. And it was characteristic how cable dropped as well, signaling a weakening of the pound due to the slowdown of economic activity in the crucial services sector of the UK economy. Note that the services sector in the UK economy comprises around 60 to 70% of the total GDP, and that's a big issue, especially given that the markets have a substantial worry about the possibility of stagflation in the UK economy, which would be practically low rates and at the same time high inflationary pressures within the UK economy. It should be noted that Bank of England has repeatedly stated that it was characteristic Hugh Pill's comments which were made on Friday. He's the chief economist of Bank of England, that the bank has to continue to hike rates in the coming months in order to curb inflationary pressures within the UK economy. However, such a hiking of rates could practically weaken the economic outlook for the UK economy. Practically, it could slow it down, even cause a mild recession. And that's the big worry. And given that today's preliminary services PMI figure dropped, implying a slowdown of the expansion of economic activity in the UK services sector, which is the largest one, those worries tended to intensify even further. And that caused the pound to drop against the US dollar at least.
Okay, let's move across the world. I understand that RBNZ is to deliver an interest rate decision tomorrow during the Asian session. What are the expectations?
Yeah, that may prove to be the main event of the Asian session tomorrow. Now, RBNZ is widely expected, to hike rates at least by 25 basis points. And it shows, NZDOS shows that, or at least implies that the market may have fully priced in such a scenario. So practically a mere rate hike by RBNZ of 25 basis points may not be enough to actually provide substantial support for the Kiwi. I would expect, given that the bank has a dual mandate, it has to keep inflation under control, and inflation in the New Zealand economy is very high. At the same time, the bank has the mandate to promote full employment, and we have to note that the employment market in New Zealand seems to be quite tight. It was characteristic that the unemployment rate for quarter one was at around 3.2%, and that was indicative of how tight the employment market in New Zealand actually is. So practically the bank is allowed to continue to hike rates and tighten its monetary policy further. That tended to induce practically analysts to start speculating on whether the bank will actually deliver a double rate hike tomorrow during the Asian session, a 50 basis points rate hike, and raise interest rates from 1.5% to 2% directly without making a short stop at 1.75 or not. There is a flip side though on this one. And the flip side would be that we have a trade balance, actually a trade deficit for New Zealand, which is widening. At the same time, China economically is slowing down, and note that China is one of the key economic partners for New Zealand. And those two facts more or less tend to advise caution for the Central Bank of New Zealand, for RBNZ. So overall, we would expect that the bank actually delivers at least a 25 basis points rate hike. Should that be accompanied also by a hawkish forward guidance, practically foreshadowing more rate hikes to come, we may see some support growing for the Kiwi. Should the bank actually deliver a double rate hike and in addition provide also a hawkish forward guidance, the support for the Kiwi could be substantial.
Has the OC been on the rise as well?
the Aussie has been on the rise. However, the Aussie as a commodity currency, there were some worries in the past 24 hours about China and its economic growth, and the Australian economy is also closely linked with the Chinese economy. So practically there have been some slight bearish tendencies during today's Asian session. There are some worries about the possible effects of a slowdown of the Chinese economy and the Australian economy as well. And overall, we have to say that the upward movement of the Aussie, which was evident in the past few days, has come into doubt, at least in the European session today. We see that in the technicals later on as well, so we will expand more on this later on.
And the loonie?
The CAD has been more or less strengthening over the past 10 days or so, even something more against the US dollar. A strong hawkish Bank of Canada seems to be present for the past 1.5 months, provides support for the loonie. The loonie also tends to have some influence from the market sentiment. Should the market sentiment more or less be risk on, that tends to provide some support for the loonie as well. Should the market sentiment be more cautious, that tends to hurt the loonie. And on the other hand, there's always WTI prices and oil prices, which tend to affect the loonie's direction, given that Canada as an economy has one of its main products is oil. So definitely the outlook of the Canadian economy is also linked to the prices of oil.
Okay. So how are oil prices actually behaving and what's driving them?
Oil prices have been in a sideways motion. WTI prices have been in a sideways motion for the past few days. There has been some fooling around practically between 108, I would dare to say, and 107. Some breaking of the pre-mentioned levels was evident, but nothing much. Oil prices have conflicting fundamentals right now. On the one hand, we have a war in Ukraine and a tightness in supply, which tends to provide support for oil prices. At the same time, though, there are substantial worries for the demand side of oil, especially given China's slowdown, as China is one of the main consumers of oil, and any slowdown of its key manufacturing industrial sector could lead to a low consumption of oil. So we will have to see how this actually plays out and which one has the upper hand. On the flip side, one word of caution: should China, for any given reason, show that it has been recovering economically, that could boost oil prices, as then the fundamentals would align, because you have on the one hand a tight supply which is continued, but the demand side would switch sides, and we may see support for oil prices be on the rise.
Okay. Last but not least, what's up in the gold market?
Gold's price was supported practically by the weaker US dollar, and that's because gold's price practically is denominated in US dollars. So practically any strengthening of the US dollar would mean that you would need less dollars to buy the same amount of gold, and vice versa. And a weakening of the US dollar would mean that you need more US dollars to buy gold. At the same time, gold is also considered to be a safe haven, and its behavior is more or less antagonistic also to US bonds. So any rise of yields, US yields, would be detrimental to gold's price, and vice versa. And a drop of yields could provide some support for gold's price. I would dare to note, though, that gold's price over the past 5 days, 4, and today is the 5th day, has been on the rise, has been in the greens. So practically, I would expect this motion to continue, and we see that in the technicals more clearly, as long as practically maintains or does not breach the upward trend line guiding it.
Great. Thank you, Peter. Thank you, everyone, for watching. Join us after a short break for technical analysis with Peter Yosif.
Welcome everybody for the technical analysis part of today. Now we're going discussing a number of instruments. What you see in front of you on your screen, that would be Euro USDs for may prove to be the market mover of today. Let me readjust the levels just a bit. So we had discussed also the notion that Euro has been strengthening against the US dollar, which is quite impressive. Especially note how the price action was caught between conflicting trend lines. The downward trend line, which started practically since the 11th of February here, 10th of February. It was a wide downward motion, which was broken only around the end of March and has been broken by the price action practically on the 23rd of the month. That would be yesterday. So we have an upward motion, a very intense upward motion. You have to note that it has even steepened over the past 24 hours. At the same time, we tend to note that the Rsi indicator below the 4-hour chart has reached above the reading of 70. So more or less, the pair may have reached overbought levels and may be ripe for correction lower. I would also note that the price action has reached the upper Bulger band and is actually flirting with it. The upper Bulger band should keep it under control, at least for the next day. So I would expect, should the Euro bulls maintain control over the pair, I wouldn't expect it to break much of the Bulger band. That would be something of interest. Overall, though, the bullish sentiment is present. Once again, don't forget, it may have reached overbought levels. So a correction lower could be expected. At the same time, though, the bullish outlook for the pair remains present as long as it remains above the upward trend line, which has started to guide the pair since the 13th of May. Should the bulls actually maintain control as expected, we may see the pair breaking the 1.0740, which was previously a support line. And as the price action has broken below it, it has now turned into a resistance line. Higher than that, and as the next possible target for the bulls, we would note the 1.0935, providing resistance once, twice, 3 times here. And even higher, which would be an ultimate target for the bulls, would be the R3, 1.1185, which was last seen practically provided resistance quite nicely here and reversed the upward motion. That was on the 31st of March. For the time being, the pair is trading at highs not seen since the 26th of April. On the flip side, should the bears take over? Let me readjust this. There you go. We would expect the pair's price action to reverse direction. The first sign of a trend reversal, in my opinion, would be a breaking of the upward trend line, which we had mentioned before. And that would be followed probably by a breaking of the S1, 1.0605. Lower than that, we have the 1.0480. Note the support provided here. And even lower, the 1.0355. So, to sum it up, we expect the bullish tendencies to continue. B, the pair may have reached overbought levels and may be ripe for correction lower, so that shouldn't take you by surprise. That could happen. That's within the plan. However, we maintain a bullish outlook as long as it remains above the upward trend line. Let's move to the Kiwi, and this would be NZD USDs for our chart. We could add here also the Bulger bands. Okay, this trend 20 moving average, 2 deviations. Oh yeah, that's interesting. Now, on the one hand, we're having here an upward trend line. I would consider this a false break. For the time being, the pair has corrected lower, has not broken the upward trend line yet though. So we still remain bullish. Should the price action actually break the upward trend line, we would switch our bullish outlook in favor of a sideways motion initially, and that would be between the 0.6475 resistance line and the 0.6365 support line. However, that's only until the market decides on the direction of the next leg of the price action of the pair. Always talking about NZD USD. Once again, though, for the time being, we remain bullish as long as the upward trend line has not been breached. On the flip side, we have to note that the Rsi Indicator had reached the level of 70, corrected lower, has a slight downward slope here, which more or less tends to predispose us that the stabilization of the pair seems to be ongoing for the time being, at least during the European and Asian session. Even some slight bearish tendencies. However, overall, we would expect that as a first sign of a trend reversal for the pair to break the upward trend line, move between the 0.6475 and the 0.6365. Lower than that, and should the bears finally take over, we may see the pair breaking the 0.6365, which was a resistance line here, and start aiming for 0.6290, which provided substantial support right here. And as the lowest level noted would be the 0.6215, providing support for the pair. That was around the 13th of May. It's also the lowest point of the price action in our chart to the upside. And should the bulls actually regain control, bounce on the upward trend line, the first notion would be for the 0.6475 to be broken. That would reaffirm the bullish outlook of the price action. Note how it provided resistance here and here. Higher than that would be the 0.6555, providing resistance around the 4th to the 5th of May. And even higher would be the 0.6645, which provided resistance around the 26th, 27th of April. Now, fundamentally, RBNZ's interest rate decision is going to be crucial. And should the decision which is to be released during tomorrow's Asian session, actually excite Kiwi traders, we may see high, or at least higher than usual, volatility affecting the pair. In this case, to the upward motion, breaking definitely the 0.6475 and start aiming for the 0.6555, if not even higher. Moving on to cable, GBP USD, an interesting move. Note how the pair was actually moving upwards, following a trend line, an upward trend line. That was since the 19th of May. Now, today's European session, the release of the preliminary PMI figures for May, especially for the services sector, which actually dropped substantially, implying a slowdown of economic activity for the crucial service sector of the UK economy, forced the pair downwards and more or less implied a substantial weakening of the pound. It's characteristic how the upward trend line has been broken, and the price action more or less, let me readjust this. There you go. That's clearer now. Bounced on the 1.25 support line. Now, given that the upward motion was interrupted, and given that the price action is just at the 1.25, actually just below it, I would expect a further dive deeper, lower towards the 1.2330 before switching the bullish outlook into directly a bearish one. And that should be more obvious in the American session or by the end of the European one. Should the price action remain at 1.25, we may see it rebounding, breaking just above it, and start aiming for the 1.2640, which is quite an interesting move because it would not allow for the bearish outlook to take place. On the contrary, such a movement would imply that for the time being we maintain on a sideways motion between the 1.2640 and the 1.25. For the time being, let's correct this though, because it has even slightly been broken. Let's mark this in the reds. And let's find the next support line. Let's move this to the daily chart. And we have to go way down. Okay, this is the next support line. It's pretty close to S2, I know it, but it's very obvious and it should not be neglected. And it's placed at 1.26. Let's move back to the 4-hour chart. Let's readjust the levels. Definitely pretty close, but still valid. About that. $1.2170. The S1 is now being placed at 1.2330. The first resistance line now is being placed at 1.25 as it has been broken. So the support line practically reverses its role and becomes now resistance line. Higher than that would be the 1.2640. And last but not least, the resistance line, the R3, would be placed at 1.2775. There you have it. Now we switch our bullish outlook initially in favor of a sideways movement between the 1.25 and the 1.2640. So that would imply a correction higher, just above the 1.25, maybe start aiming for the 1.2640. Should, until the end of the European session, maybe even the American session, the pair move considerably lower, placing more distance between the price action and the 1.25 resistance line, that would mean practically the dominance of the bears, and we may start seeing a downward trend line starting to form. In which case, I would expect the price action to reach and test the 1.2330, which provided support around the 19th, 18th to the 19th of May. Should the S1 be broken, the next possible target would be the 1.2170, providing support around the 12th to the 13th of May, actually 11th to the 13th of May. And the lowest level noted would be the 1.2070. To the upside, and should the bulls actually regain control over the pair's direction, we would expect a clear breaking of the 1.25. However, that's not enough for a bullish outlook. For a bullish outlook, we would require A, the breaking of the R1, B, the breaking of the R2 1.2640, which provided resistance here, and then for the pair to start aiming for the 1.2775. I would like to see clear higher peaks and higher truths, trend line starting to form to the upwards in order to actually switch from a sideways bias in favor of a bullish outlook. At the same time, lower peaks, lower truths, and the price action starting to aim for the 1.2330, if not reaching it, would be implying that a bearish sentiment in play and could lead us for a bearish outlook for the pair. Let's move to USD Jpy. Let's have a look at the safe haven. Nothing much. A sideways motion practically between, that would be around 128.30. Let's magnify this. Let's readjust the level as well. Sorry guys, this should be read R1. The R3 is at 1.3135. The R1 is at 128.30. And the R2 is at 129.75. Let's readjust this just to be more accurate with a prime touch. Here, note how it practically reversed the upward movement of the pair of USD Jpy into downward motion. Let's have a look also at the support lines. The first support line is being placed at 127. The second support line, which was a prior resistance line, would be at 126.10. And the final S3 support line would be at 124.80. There you go. The price action has actually seems about to break the steepening downward trend line, which has been guiding it since the 17th of May. So practically, should the breaking become more clear and the pair continue to move in a sideways motion, that would force us to switch our bearish outlook in favor of a bias for a sideways movement if we cannot do it already. And that would be between the 128.30 and the 127. Should the price action actually break below the 127, like this, that would imply a reinitiation of the bearish outlook probably, and especially if it starts aiming for the 126.10. Lower than that, we note also the 124.80, which is the lowest level practically noted, not of the price action, but as a support line here. We could note also another support line at this level. But the reversal of the downward motion, of the steep downward motion, and that was around the 12th of April, was very characteristic. At the same time, the 126.10 provided some resistance here, while the 127 provided some support here. That would be around the 27th of April. To the upside, and should the price action actually break above the 128.30, that could be signaling a change of trend, and we may see a bullish outlook resurfacing for the pair. Note how the 128.30 practically kept the price action at bay, and that was around the 21st of May, 20th, sorry, of May. Higher than that would be the 129.75, and even higher the 131.35. For the time being, two qualitative characteristics of the chart we're looking at right now. The first would be the narrowing of the Bulger bands. You can see how practically the upper level and the lower level have started to converge. That would be signaling that volatility seems to be losing some steam for the pair here. At the same time, the Rsi indicator is between the readings of 50 and 30 with a downward slope, slightly starting to stabilize in the past few hours. So practically that would imply that the bearish sentiment of the market is still present. So it should not be underestimated. It could be the case that the bears regain the upper hand and actually continue to drive the pair lower in the next couple of hours. For the time being, though, for that scenario to be realized, we would require a clear breaking of the 127 support line and for the price action to start aiming for the 126.10. Let's have a look also at the Aussie. Oh yeah, that's another interesting chart. We have practically a breaking of the upward trend line guiding it. That was in the late Asian, early European session today. And it seems we will be switching our bullish outlook in favor of a sideways bias initially, And that would be between the 0.7035 support line here and the 0.7165 resistance line here. However, we have to note that yesterday's price action provided us practically with a mini resistance line somewhere here. Let's place it just to be also in red. Here you go. And that's around the 71, let me have a look, 71.25. So you have practically a new resistance line which was confirmed once, twice, 3 times. It was also used as a support level here. It should not be underestimated as well. It's an interesting level. You should keep it in mind. And probably we would expect the price action to move between the 0.7125. Let's readjust this. Let's move this higher so it can catch exactly the level here. This would be placed at the 0.7180. And the R3 being the 0.7165. Practically reverse the upward motion, the steep upward motion of the pair around the 4th to the 5th of May, and actually forced it to dive far deeper. You can see how the pair, after hitting that level, dropped of around 187 pips. It was very characteristic in the next 1, 2, 3, 4, 5, 20 hours. Once again, a small recap. We maintain a bias for a sideways motion as the price action has broken the upward trend line guiding the pair since the 19th of May. The sideways motion is expected to be between the 0.7125 resistance line and the 0.7035 support line. Note how traders use the sideways motion by selling when it reaches the high level, in this case the 0.7125, and buy when it reaches the low level, the S1, in this case the 0.7035. We're not advising you to do this. Don't forget, this is educational material only. Other than that, should the S1 be broken, that would practically switch the outlook from a sideways motion to a bearish outlook. And after S1 0.7035 is broken, the next possible stop for the bears could be the S2 0.6950, which provided support here and reversed the downward motion of the pair around the 19th of May. Lower than that would be the 0.6840, could be a couple of pips lower, 0.6835, to coincide exactly with this point here, where it provided some support. We took the candlestick before that. But a little bit lower could also be acceptable. Nevertheless, this drop here should not be underestimated as well. To the upside, and should the bulls regain control over the pair's direction, we may see the price action breaking the 0.7125. Start aiming for the 0.7180, which provides resistance here. And guys, sorry for this. This should read 0.7265, not 0.7165. There you go. And as an ultimate target for the bulls would be the 0.7265, which provided resistance here. Higher than that, however, we see that a little bit extreme for the time being, would be the 0.7340, which provided support here and has now turned into a resistance line, given that the price action has broken below it. Once again, the RSI indicator is just above the reading of 50, a slight upward motion, however, nothing conclusive yet. Nevertheless, it tends to remind us that the bulls are still present and could take over. Let's have a look at USD CHF. Oh yeah. The downward motion continues, people. But it could be threatened. It would be interesting. Let's correct the resistance and the support lines. First, the pair has broken the 0.9670, so that turns into a resistance line. Let's also reverse this to the downward motion here and reverse it into a support line. Let's have a look at the level. It would be at 0.9285. Okay. Oh, that's fixed. Next one. 94.10. 0.9410, sorry. Even lower would be 95.55. Yep, 95.50. Here you go. With the R1 now being placed at 0.9670. And the R2 being placed at 0.97. 97.57. 97. Have a look at the 60. 97.60. Let's correct this and have a look at it. Yeah, still valid. Good. Let's keep it. R3 being placed at 98.75. R4 for the time being is out of the question. We are maintaining a bearish outlook as long as the price action remains below the downward trend line. Note how the price action is actually threatening the downward trend line right now. Should the downward trend line be broken, that would be a sign of a trend reversal or trend change. And we would expect, given the tight range-bound movement of the past 24 hours, for the pair to maintain a sideways motion before deciding the direction of its next leg, probably below the 96.70, just below it. Note how the RSI indicator is below the reading of 30. It has corrected at some point a little bit higher, which tends to imply that the pair had actually reached oversold levels and did correct higher, and we would expect this to continue. The same applies also for the Bulger bands. Note how the price action bounced back up once it reached the lower Bulger band. It was very characteristic. So we have to wait and see how high the correction will be and whether that will differentiate and break the downward trend line or just shift it to the right side. So that's another possible scenario. We may see the pair correcting a little bit higher and then start dropping once again, aiming for the 0.9555 as the next possible target for the bears. Note how the pair, the level, was actually able to reverse the downward motion and that was around the 25th of April. Lower than that, and should the selling interest be continued, we may see the pair's price action reaching 0.9410, which provided support here, and even lower, which is the lowest level in our chart of the price action, would be the 0.9285. It's actually a beautiful chart, people, and very interesting one. Quite exciting. To the upside, once again, we note the 0.9670. Note how it was verified here, and it used to be a support line here. Higher than that would be the 97.60, providing resistance here and here. That was around the 27th of April. And the highest level in our chart, and that's for the bulls. This is not needed anymore. Let's delete this. Is the R3 0.9875, which provided resistance here and here. To sum it up, we maintain a bearish outlook as long as the price action remains below the downward trend line. Small word of caution, the Rsi Indicator, which practically has reached oversold levels. Let's mark this in red. I'm thicken it up a little bit. There you go. Note how the RSI indicator has reached below the reading of 30, stayed below that as well, indicative of the bearish sentiment for USD CHF, which caused this downward motion. It's impressive. However, at the same time, the same RSI indicator may be implying that practically the price action has moved too low, and the pair has reached oversold levels and may be ripe for a correction higher. Second look at USD CAD, a similar picture. Note how the price action is about to break. It's testing actually the downward motion right now. Yeah. There is a relative stabilization. There is a lower peak once, twice, three times. You still have lower troughs. So let's readjust this. Something like this. 1, 2, 3, 1, 2, 3. It's more like the definition of a downward trend line. So we tend to maintain a bearish outlook for the pair as long as it remains below the downward trend line we have just marked. At the same time, though, we would like to note the RSI indicator, which is below the reading of 50 and slightly dropping over the past 2 hours. That could be another indication of the bears. To the downside, we would highlight the 1.2720, which provided support once, twice here. Lower than that would be the 1.2640, which provided resistance once, twice. It now has turned into a support line given that the price action is above it. Even lower and as an ultimate target for the bears would be the 1.2540, which more or less tended to provide support here. That was around the 13th of April. To the upside, picture is a little bit disturbed, as we have on the one hand the 1.2855 providing resistance here and here. Higher than that would be the 1.2915 providing resistance here, and even higher the 1.2980 providing resistance here. Even higher would be the 1.3080, which is the peak of our chart. So to sum it up, we maintain a bearish outlook for the pair as long as it remains below the downward trend line. This time incepted since the, let's have a look, the 18th of May. Yep. On the other hand, should the price action actually stabilize and break the prementioned downward trend line, our initial reaction would be to switch our bearish outlook in favor of a bias for a sideways movement initially. And that's until the market's intentions come into display once again. Should the price action actually break the downward trend line, break also the 1.2855, that would be possibly a signal that the bulls are starting to take over, as the pair has started to aim for the 1.2915. Let's have a look at golds. We had a relative question also, the fundamentals about this. This is the daily chart. Let's move to the 4-hour chart. Oh yeah, that's clearer. The price action initially broke, that was yesterday, the 1,859. Let's correct this. Let's have a look. 60. Yeah, 59 is better. Because 59 you have 2 touches. Keep it. No, we could round it up, but no. Anyway, but it was not able to support the price action above the 1,859. It dropped below it, and that could imply some stabilization for the precious metal. On the other hand, though, we have to note that the upward trend line seems to continue to guide it. So we would maintain a bearish outlook as long as the price action remains above the upward trend line. Maybe even the RSI remains, which remains above the reading of 50 and is between 50 and 70, could remind us of the presence of the bulls, sorry. Let's have a correction though here. As the price action has broken below the 1859, then that would become a resistance line. Let's have a look at the next support line. We have 3. Okay, that's nice. Delete this as well. And this. $19.03, the ultimate target for the bulls. 18.84 and 18.59. $17.87. $18.07 and 18.33. See, here you have it, an upward motion which seems to be stabilizing. It seems to be calming down. It's quite interesting. But as long as the price action remains above the upward trend line, we tend to maintain a bullish outlook, in which case we may see gold's price actually breaking the 1859 and move past the prior peak, starting to aim for the 1984, which provided resistance here. That should sum it up for the day. From all of us here at IronFX, best wishes for solid trading. Stay tuned. We have another part coming. Continue to follow. Thank you.
Hello everyone, my name is Emily and today I'm going to give you a short walkthrough of our website. Let's get started. So this is our main page. On your top right corner, you see the option login for existing clients. And then you see the option register. So if you're not an existing client, we should fix that, right? And then we have the search bar. And from here, you can choose the language that you want to use with us. Then we move on to markets. With IronFX, we offer over 200 trading instruments. For example, we have Forex, metals, indices, commodities, futures, shares, and cryptocurrencies. Moving on, we're going to this option right here, trading. You can find the account types, spread comparison, and a couple of trading tools. So I want us to check out the account types today. If you scroll down, you'll be able to compare the IronFX account types. You have two options right here, the live floating, live fixed spreads, and the STP ECN accounts. So with the first option right here, you have 4 different account types. We have the standard account, the premium account, VIP, and live zero fixed spread. Here you have the CFD instruments, the minimum lot size, base currency, spread, commission, and we click on expand full list, and we move on to the flexible leverage, stop out. We also offer swap free and Islamic account option. And this right here is called dedicated account manager available. So as soon as you open the trading account with us, one of our representatives will give you a call and start assisting you with your experience with IronFX. Moving on, we have the dealing department transaction hotline. Then we scroll up again and we choose the STP ECN accounts. Here, the difference is that you have 3 account types: no commission, zero spread, absolute zero. And again, we have the CFD instruments, minimum lot size, base currency, spread, commission, and we click on expand full list. And you have the flexible leverage, stop out. The difference here is that we do not offer the option of a swap-free Islamic account, but we do offer the option of having, again, a dedicated account manager and the dealing department transaction hotline. So after comparing all of your options, comparing the account types and finding what suits better your own needs when it comes to trading, you just click on register and you proceed with the account type that you wish. Then we scroll up again and we move on to platforms. As you see here, we have MT4, WebTrader, VPS hosting, PAM, and Trade Copier. Then we move on to the IronFX school. When it comes to this option, I truly believe that every broker should have this option for their clients, even if you're a beginner, even if you're an experienced trader, because at the end of the day, knowledge is power. And you see loads of options right here, but I want us to check out the newest addition, which is webinars. So here you see live Forex webinars. It is free of charge. You're not going to pay a single cent when it comes to this. You just need to register with us and get started. If you scroll down, you'll be able to see the webinar that suits you better. Which webinar is best for me? So we have beginner, intermediate, expert, and then you can, of course, view them all. Then if you scroll down, you'll be able to see which webinars are we hosting at the moment. You have English language, Spanish, Portuguese. You can just simply click on register and that's it. Then moving on, if you scroll down, you will be able to see our educators. That's all you have to know when it comes to our webinars, but obviously if you want to know more, you should tune in and watch one of them. Then moving on, we have this option right here, which is blog. So basically here you can get inside information when it comes to Forex news, the market, and also you can get some successful tips when it comes to trading, which is actually very cool. And the next option we see here is promotions. As you can see here, you can check our trading competitions and etc. And then we have the option right here, which is partners. So as a company, we want to build a very strong, long-lasting business relationship with our clients. So that's why we offer you this partnership program. So for example, we have the introducing brokers, the affiliates, and the white labels. And then last but not least, we have the IronFX option. So whatever questions you have or whatever information you need regarding the company, you can just simply click here and you can see why us, careers, legal documents, frequently asked questions, sponsorships, awards. And if that is not enough for you and you want to learn more, you can, of course, contact us using our live chat support or by email. So that's it for today, guys. Thank you so much for tuning in and watching us. And I hope I'm going to see you very, very, very soon for our next short version of a walkthrough. Thank you very much. Have a good one.